In the next few minutes, we will discuss the Federal Reserve takeover by the United States Treasury. The Federal Reserve, commonly referred to as the Fed, has been the cornerstone of the United States monetary system for over a century. Established in 1913, the Fed is a private corporation and completely independent from the U.S. government, while proponents would have you believe it is tasked with managing the nation's monetary policy, regulating financial institutions, and maintaining economic stability. Its only real focus is the profits it generates for its shareholders. Accordingly, because of the economic damage the central bank system has imposed on our economy, there has been a growing demand to take over the Federal Reserve to regain control of the U.S. monetary system. In this video, we will explore such a move. To understand the potential consequences of a United States Treasury takeover, it is crucial to grasp the historical context surrounding the Federal Reserve's establishment. Supposedly, the Fed was created to serve as a buffer between the government and monetary policy decisions to promote financial stability and reduce political interference in economic matters. This independence has been regarded as a fundamental principle to safeguard the economy from short-term political considerations. However, as mentioned earlier, this is more of a cover story than reality. The truth is the Fed's policies and profit moves were what caused the many financial crises we have experienced. Those who support a United States Treasury takeover explain that it will lead to increased transparency and accountability. As a government agency, the Treasury would be subject to greater scrutiny, allowing for more effective oversight by Congress and the public. Additionally, the Treasury's involvement may foster a closer alignment between monetary and fiscal policies, potentially enabling more coordinated responses to economic challenges. Furthermore, a takeover could streamline decision-making processes. With the Federal Reserve currently consisting of multiple branches and a board of governors, a unified approach could expedite policy adjustments. The United States Treasury, as a singular entity, might be able to react more swiftly to economic shocks, enhancing the nation's ability to navigate financial crises effectively. It is important to understand that most critics of a Fed takeover by the U.S. Treasury fall into one of two camps. Either they do not understand the true nature and structure of the Federal Reserve, or they are beneficiaries of the Federal Reserve. A takeover of the Fed will bring benefits such as increased transparency and streamlined decision-making. Combined with the QFS and asset-backed currency, the need for monetary policies and oversight and/or manipulation by the Fed or the Treasury would be eliminated. As it should be, the free market would manage itself without central bank control and manipulation. A takeover of the Fed by the U.S. Treasury follows the world trend, led by the BRICS nations to eliminate independent central banks in favor of government-controlled treasuries that only manage in-country asset-backed currencies. This would eliminate the interference and profit incentive by central banks to manipulate currencies and interest rates.